UK inflation falls to 1.7%.
They were not expecting for it to fall down to 1.7. They can bring down the lending rates much faster than they had already anticipated.
In the first quarter of 2024, 40% of sales fell through due to difficulty securing a mortgage, obviously tying in with harsher lending criteria.
What happens when people go to buy a property? They go to the mortgage advisor, they go to the bank, building society, and they get an AIP, which is agreement in principle. AIP is just an overall look at your finance, and they go, yes, you can borrow. But when you go to put the application in and they look well into your finances, and you've got outgoings and you've got credit cards, loans, and you've got all the other bits and pieces, all of a sudden they won't lend you what they said they will.
Has that always been the case, or has it actually got harsher since you remember?
It's definitely got harsher because of the lending criteria. Back in the 80s and 90s and 2000, lending was a lot easier. For instance, they didn't take into account the money that were outstanding to a loan or a credit card. They wouldn't take that into account. Do tell your financial advisor these are what you spend on a monthly basis, so they take that into account when they give you the AIP.
So today we have a couple of topics to go through. We'll start off by giving the titles, and then we'll discuss it as normal. Sure. The UK inflation falls to 1.7% ahead of the autumn budget. Harsher mortgage lending criteria to blame for increasing rate of property chain breaks. And OnTheMarket fast growth portal reports a dramatic increase in traffic since acquisition by Coaster. So we'll start with number one. The UK inflation falls to 1.7% ahead of the autumn budget. The Bank of England currently calculates the current rate at 1.7%, the first time below 2% since 2021. Now, could that influence the October budget?
Yes. I mean, first and foremost, they were not expecting for it to fall down to 1.7. Everyone was expecting it to fall below 2%, but at 1.9%. So 1.7 took the market by surprise, which is very good. I mean, the first thing that's going to happen, it gives Bank of England more room to maneuver when it comes to lending rates. They can bring down the lending rates much faster than they had already anticipated, which is great for people like you and I, and everyone else out there that is borrowing money. Fantastic. Now, but one has to be very careful that if the lending rate doesn't come down as much as it should, then it will hurt businesses.
Why has it come down so low?
So obviously inflation, it was always had the target of sitting at 2% for a while, and as you said, it was supposed to be 1.9. And in such a sharp drop, I'm not exactly sure what factors determine it.
I think what I read was that petrol prices was one of the big factors. Obviously fuel, not petrol, but fuel prices was one of the factors that it dropped down to 1.7%. That had a lot to do with it. Obviously, when you look at the petrol prices globally, price of oil globally, that has come down somewhat from its height, which was a couple of years ago, maybe a year and a half ago, and that has had a big impact on the inflation. As fuel prices comes down, so does everything else comes down. Fuel prices go up, everything else goes up, inflation goes up. So that was one of the reasons that has come down more than it should have done. Yes.
You predicted there was going to be a uptick in the market. We spoke a couple of weeks ago or a couple of months ago, and you said that the market is going to increase. There's going to be more activity on the market, and it's going to be like that for another 2 years. And I was saying, no, the market's coming down. You can see there's a lot of properties on there that are being reduced. Now this has happened. It's come down to 1.7. That should in turn bring the mortgage rates down. Is this what you predicted? Is this how you saw it?
Yes, it was. I mean, look, it's a trend. It's the old adage. Trend is your friend. So what happens is that when the trend is on the way down, which is the mortgage rate is on the way down, it will keep on coming down until it gets to a point that it cannot come down any further because of external factors, which is inflation. And once inflation starts creeping in and the government sees that they can't basically leave it that low because inflation is going to get a hand, they will increase the lending rates, and that in turn brings less buyers to the market because it costs them more to borrow. House prices will go up, and house prices will go down, and so forth. So house prices has a lot to do with interest rates, and the government. The only thing Bank of England, not government, the only thing the Bank of England has, the only tool that they have in the back pocket is interest rate. Bring the interest rate down. When inflation is down, house price will go up. Take the interest rate up. When inflation is up, it will bring the house prices down. It's a trend. So right now we're in a trend of interest rates slightly coming down because inflation is coming down. Hence, house prices will go up, more buyers in the market, and I expect this to go on for at least about 2 years before, at some stage, inflation will then creep in. It's a cycle. I keep saying it. It's a cycle.
Yeah.
It's been there ever since day dot, and it will go on being there till the end. Cycle is what you've got to watch.
So if you have inflation down, they then bring the rates down, interest rates down. You said inflation in about 2 years may go up again. That means they'll increase the interest rates higher to obviously tackle that problem. Obviously, when the rates are down, people start borrowing. People start borrowing money, loans, houses, cars, you name it, they start doing it.
Yeah.
Then in, let's say, 5 years' time, whichever, they put the rates back up. Basically, you got to spend money, but not overspend. Is a suggestion that we would have, right?
Yeah, you've got, like anyone else, you've got to be very careful with your borrowing. If you're borrowing for a mortgage and it's your own home, it's irrelevant whether your house is worth £1 or £1 million. It's your home. You're going to live there. So it makes no difference. It's, a lot of people look at their homes as an asset. Well, it is only when you sell it. But all the time you live in there, it's not. You can't do anything with it. You live in there. So, unless you die and you leave it to your children or whoever you leave it to, then it's an asset that you've left for somebody else. The moment you sell your home, you've got to either rent another home or buy another home. So you can't do much with the money apart from putting it back in again. So they call it investing in your property. Yes, it is. Only when you don't need to live there anymore. Yeah. Yes.
Yeah, you don't sell it.
Yeah.
Okay, excellent. Let's change to the next topic, which is harsher mortgage lending criteria to blame for increasing rate of property chain breaks. Kean, you had some stats that you wanted to share.
Yes, so in the first quarter of 2024, there was a report done looking into the reasons why sales fell through. So 40%, obviously the majority of sales fell through due to difficulty securing a mortgage, obviously tying in with harsher lending criteria, interest rates, things like that.
And if I can jump in there, Kian, you're absolutely right. Difficulty securing a mortgage. What happens when people go to buy a property? They go to the mortgage advisor, they go to the bank, building society, and they get an AIP, which is agreement in principle.
Yeah. And
that AIP is just an overall look at your finance, and they go, yes, you can borrow up to, let's say, I don't know, £500,000. But when you go to put the application in and they look well into your finances, and you've got outgoings and you've got credit cards and you've got loans and you've got all the other bits and pieces, all of a sudden they won't lend you what they said they will. Hence, 40% of sales falls through because they'd already set their heart on buying a property. They've already put an offer forward. They said this is what they're going to pay for it. And then the lender says, no, I can't lend you 5, but I can lend you 4 because of your, they've had a look into your finances. Now, the seller can't sell their property for £100,000 less. So what happens? They pull out. So that's why 40% falls through because of the lending criteria, where everyone thinks they can borrow X amount, but in reality, when it comes down to nitty-gritty, they can't borrow as much, hence it falls through.
And then almost going on similar to that, you have 27% of sales which fell through due to buyers no longer wanting to proceed or changing their mind. This could
Correct.
potentially be the similar thing to that, perhaps, where they have to spend a bit more on mortgages and things like that, and it's not stacking up anymore.
Exactly. Or so people do get buyer's remorse. Buyer's remorse, they get excited about it, and they go think about it, and they sleep on it, and then a week later they go, you know what, I don't want this. So it's a buyer's remorse where they got excited at the beginning and then they changed their mind. Yeah.
Then you have significantly lower proportion now. You have 14% due to chain collapsing, a sale didn't go through, and then you have 12% going through which failed due to gazumping. And then the final 7% was due to complications with the survey. But you see, obviously the vast majority comes from difficulty securing a mortgage, and potentially things like buyer's remorse, which is more
correct. Now, obviously, the 14%, which is due to chains collapsing. Obviously, if you're buying a property, you might be in a chain of 3 or 4 different buyers up and down the chain, and if one collapses, the whole chain collapses, unless an agent can put it back together, which is unlikely because it sells takes usually 6, 7, 8 weeks for it to be put together again. So on that basis, people can't wait. They go, oh well, never mind, I'll go somewhere else, and the whole thing falls apart. And then you've got gazumping. Now, gazumping only really happens in a seller's market rather than buyer's market. Yes, at the moment we've had the buyer's. It's been a buyer's market, which means people can choose what they want. They can knock down the prices and everything else. And sellers, they really they have to drop their prices if the buyer says, I'm not paying that much for it. Gazumping happens where there is a lot of buyers, not many properties. That's when people gazump. Although at the moment there's buyers and sellers, but buyers can't get the mortgage, as you said, point number 1. Hence, gazumping doesn't really happen. Hence, percentage is pretty low on this one at the moment. I remember back in the 80s when I first started out in this business, gazumping was rife. It was absolutely rife. It was, every house or home that we sold, within a matter of a few days later, somebody would offer thousands of pounds more than the previous buyer, and if we said, look, we don't entertain gazumping, they would go and knock on the owner's door and go, I'll offer you more. Then they would come back to us and go, no, you get, I've had somebody knock on my door. So that's how the gazumping kind of worked. But yes, and then obviously you got the last one, which 7% sales abandoned due to complication with survey. Again, when a survey is done, things come up on the survey, which the buyer all of a sudden gets scared. And says, well, no, I don't want it. It's going to cost me a lot of money to fix that. So they walk away. It's a small percentage, but nonetheless, it's there. Yeah.
You're talking about the AIP, and then obviously it was 40% of sales collapse securing a mortgage. Has that always been the case from that percent? Has it always been from the 80s, or has it actually got harsher since you remember?
No, it's definitely got harsher because of the lending criteria. When back in the 80s and 90s and 2000, lending was a lot easier. So they didn't take into account for instance, they didn't take into account the money that you were outstanding to a loan or a credit card. They wouldn't take that into account normally. And if you had an outgoing to for instance, a monthly outgoing to a gym, they wouldn't take that into account. Nowadays, some lenders do take everything into account. Your regular monthly outgoing, they take that into account, and then they deduct it from the lending. And never used to be like that. So that's why AIP doesn't take any of that into consideration. AIP, the only thing AIP does is, okay, how much do you earn? Do you have any loans? Any credit cards? If the answer is no, okay, we can lend you 4.5, 5.5 times your salary. But when they get into nitty-gritty and the application, all of a sudden you may have a smoking habit. Now that they take that into account. You may be as you said, go to the gym and spend on £100 a month on a regular basis because it shows that on your bank statements. So it's what shows on your bank statements that is on a regular basis that they will penalise you for it. Yes.
So the best bet is before you go and apply for a mortgage to make sure all your debts are cleared and
yes, of course,
haven't got any
and
loans
also
outstanding.
if you've got certain habits that whether it's through sports, smoking, whatever, do tell your financial advisor these are what you spend on a monthly basis, so they take that into account when they give you the AIP.
Yeah.
Yes.
You won't be disheartened when it
It
doesn't
won't-
come up.
Exactly that. Yeah.
Makes sense. Okay, next topic, which is the final topic we'll go through today. On the market, fast growth. The portal reports a dramatic increase in traffic since acquisition by CoStar. So On the Market recently reported a substantial increase in unique website traffic, listing agents and unique visitors since acquisition by CoStar last year. Rightmove and Zoopla saw a decline in traffic by 9% and 1% respectively. Was it a good idea for Rightmove to reject the sale for over 6 billion?
The jury's out on that, but what I can say is that On the Market is the third largest portal in England when it comes to property. Of course, they were struggling, so they had no when I say obviously when I say struggling, I don't mean they were financially struggling, but they really wanted to get up and compete with the other two on the same playing field. However, they couldn't because the finances didn't allow them. So they sold up or to CoStar. They bought them out. Any company that buys another company, they tend to spend a lot of money on marketing.
Yeah.
And hence, the more money you throw at marketing, the more traffic you're going to get. Now, whether this will last, for a long time, or whether it's just a flash in the pan, we'll have to wait and see. But Rightmove is the biggest, Zoopla is the second, and On the Market is the third.
Yeah. Kean, is there space for a third competitor?
So obviously Rightmove with the absolute lion's share of website traffic, they reported over 90 million visits in September. So using SEMrush, they reported that Zoopla had around 28.25 million monthly visits in September, and On the Market sat at 23.1. So while Rightmove is still blazing ahead in terms of market share and sort of dominance, the space between Zoopla and On the Market, obviously with the increased advertising and marketing that's been poured into On the Market, it would seem that there is space for that third, and perhaps On the Market maybe, riding behind Zoopla, maybe overtaking.
Exactly. Maybe they become a second portal. You don't know, but it's all about marketing.
Yeah.
It's all about marketing. If they market it right, they can move up the ladder. If they've got deep enough pockets, they'll move up the ladder. So they've got to be smart with the money that they've got. So yes.
As a business perspective, what would your strategy be if you were On the Market? Obviously, they're throwing money into marketing.
Yeah.
You've got two leading portals. You've just given the stats on it, close enough to Zoopla. Rightmove's still far ahead. How could they compete with Rightmove?
Well, this is it. They've got to have some indifference. At the end of the day, Rightmove has been around for a long, long time. So everyone knows Rightmove because they were the first portal. Then came Zoopla. Now, Zoopla became number two by acquisition. They went out there and they start buying smaller portals and made themselves into one big portal, Zoopla. And obviously, On the Market is the newest kid on the block, which has only been set up for last few years. And obviously, they want to grow. I would do exactly what On the Market has done. If I didn't have deep enough pockets, if I didn't have the finance in order to push myself up when it comes to marketing, I would sell my shares, some shares, I would keep some, and I would maybe 50% or so to somebody else who's got deep pockets that can throw money at it, so that we can go up the ladder and compete with the other two, if not overtake Zoopla, and then have Rightmove in our sight in order to get there. How long will it take? Nobody knows. They just have to keep on doing it. Yeah, in order to get there. Yeah.
Okay, excellent. We were going to leave it there, but I have just seen a report that I want to discuss with you guys. It's unconfirmed from what I can see, but Reeves to leave capital gains tax on property untouched in the budget. Have you seen that?
Yeah, I saw that this morning.
Yeah.
Which surprises me really, because all the time up to last night they were talking about increase in capital gains tax, even just by maybe 4% from what it is. They were right at the beginning a few weeks ago. They were branding like 40%, an increase of almost like 16 to 20%. Now then they were talking about only 4%, and obviously it's all speculation. We a lot of people speculate, but the real thing, we'll have to wait till the end of October to see what decision they make. Yes, but whichever way you look at it, they've got to raise money.
Yeah.
And they will do anything and everything in their power in order to raise money. So yeah, but I saw that.
We'll have to wait and see.
Yeah.
Excellent. It's been fantastic once again. If you enjoyed what you saw, got some value from what we said, please like and subscribe to the channel. Thank you, and see you again soon.